But for the time being, let's focus on the sector that's been shining. That's the metal space. Metal stocks have been doing quite well this week. The hope is that they're going to see a big stimulus coming out from China. The dollar index has slipped a little bit as well, which could bode well for them. To understand how do you approach the metal stocks, Vikash Singh, VP at Metals and Mining and PhillipCapital, joins us on the show. Hi Vikash, good to see you after a while and hope all well at your end. Well, Vikash, tell us, how do you approach the metal stocks from here on? The hope is about stimulus coming in from China. But do you think that it'll be good enough to push these stocks higher? Point number one. And how do you approach them? Do you like ferrous or non-ferrous if that much awaited stimulus comes about?
Good morning, Nigel. So basically, we are betting more on the ferrous side than non-ferrous. Largely, there is a hope that the China stimulus would come, though nothing concrete has been come as of now.
So you're making that point. You like ferrous in comparison to non-ferrous. Please complete that point.
Yeah, sorry for the technical difficulty. So ferrous I like more than non-ferrous. There are two reasons that in ferrous China also has a basically tendency that they would keep the production of the steel intact, at least if not higher on a year-on-year basis. Already they are 2.5% higher in the first 7 months. That calls for a 4% cut in the next 5 months on a year-on-year basis. So it's not the demand upgradation where we are banking on, but rather than the production cuts in China, which also bodes well with the fact that the Chinese mills are not making any profitability. At the same time in India, basically, we are into an election year. Monsoon is almost at its fag end, and the prices post-monsoon usually keeps on increasing. So ferrous, I think in the next 6 months would do much better than non-ferrous, because non-ferrous does not have that luxury of Chinese production cuts or even a better domestic demand.
Okay. I also wanted your thought on the steel stocks, Vikash. What are you looking at? What do you prefer there? And, with a 12-month time frame, what are your top picks?
Our top picks are Tata Steel and SAIL at this point of time, and Hindalco in the ferrous and non-ferrous test combined.
Okay. Okay, all right. Vikas, I wanted to ask you about NMDC Steel. I mean, that stock is moving one way north. They've just started the blast furnace, but the street is expecting the asset to go at a big premium. How would you value that asset? They'll have some kind of backward integration as well. A 3 million ton plant, EV, what are you factoring in?
Hi. So actually, they don't have a backward integration, but they would have an arrangement with NMDC mining company to get the iron ore at the market price. So it's not actually an integration. While if you look at the current market price, including the peak debt which the company could have, they are already at somewhere around 18,000-19,000 crore kind of the EV. Versus next 2 years, we don't see much of the profits coming in. At least the net loss level is expected. So I think that it's already at a good EV, and some profit booking should happen at this price, because plant is located in Bastar, and this is logistically a little bit challenging area. So I'm exactly not sure that what kind of the profitability the company can make in the longer term, but it would be difficult to run the plant without NMDC support. So at 19 to 20,000 kind of the EV, I would see that the profit booking can be done, because in past most of the assets has gone at around the same levels of EVs, basically 5 to 6,000 crore per million ton.
Okay, all right, Vikas. So 20,000 crores of EV is already what we are at. 15,000 crore market cap, 5,000 crore debt. And it just meant that they have assured supply coming in from NMDC, which is being run by the same entity itself. Final question then, how do you see steel spreads move from here? The talk was that steel prices will stay stable and coking coal cost will come down. Do you expect that to continue? Spreads will hold or expand?
So we are also expecting spread to go up from here onwards. Though the steel prices have come down in the past couple of months, but it's rising again, as well as the coking coal prices. But the fall in the coking coal prices is still higher than the fall in the steel prices. So therefore, net, the steel spread should be marginally better than what we have seen in the 1Q.
Okay, thanks a lot for joining us, Vikash. Have a great day. Let's get back to the market now, which is